that anxiety around Oracle, around companies that have been tapping the debt markets to finance the AI, well, focus on infrastructure, do you think it's the right moment to be going into these sorts of names or to be pulling back?
I think it's very interesting because, as you know, there's been a lot of chat on the street, if you will, about are we in a bubble, are we not in a bubble? But the fact that investors are being very discerning, they're putting money in private companies, they're putting money in some of those public companies, but then they're also pulling back from companies where they're not necessarily approving, if you will, of the total package, or don't like the surprises for increased spending or increased commitments. And so that discerning nature is really constructive. And we are big believers. In fact, one of our core big three macro themes that we'll be introducing in our capital market assumptions is Industrial Revolution 4.0. And we think AI is just part of it. There's a lot bigger, broader spend, but we are definitely in a revolution that's taking this economy and putting it in a whole different place.
I mean, Carol, go deeper on what discerning is. Discerning, $134 billion valuation for a private company that, agreed, has a revenue run rate of some $4.8 billion. An $800 billion market valuation for SpaceX in the private market, so wants to be worth $1.5 trillion when it IPOs in 2026. What spells out discerning to you? What are the financials you need to see?
I think discerning spells out somewhat, if we just take the public markets and we look at, for example, when you had 5 of the Mag 7 all report in the same week, and they all, for the most part, beat expectations, and yet some stocks rallied and some declined because of investors listening through to the story. So there's a piece there where investors want to participate in the industry, in technology in general, and they're trying to figure out where. I think there is always that allure. It's tough to get your head around the financials, even though a number of different entities now are trying to provide us index on private companies. And I saw last week that the CBOE and others are looking to want to write options and futures on private companies. So there's different ways to participate in it, but investors want a foot in that market, because I think for anyone who lived through prior periods, you don't want to miss out on not having everything on the sidelines.
But Carol, is that democratization, or is that frothiness and a desire to just get in on super high valuations?
Yeah, I think we're still trying to figure that out. For me, it's a way of parsing risk in different places. It's sort of like, too, that we've seen this evolution of the prediction markets, where in the old days, you had your traditional 60-40 portfolio. If you were nervous about markets, you had to trim equity exposure. Now you have different ways to sort of execute on that risk nervousness. You might go buy a levered ETF, or if you own a highly concentrated position in one name, you might go out and say, well, I'm going to buy an option or a single strategy ETF or a single stock ETF on that's levered to the downside, just to offset some of my potential risk. So there's different ways to play it, which we're still trying to figure out. Does it get frothy? And frothy gets when everyone runs in the same direction and we push these things all parabolic. And despite the fact that they've been running for 3 years now, they're not parabolic yet.
Yeah, and therefore is the proof point yet again earnings season. Is that where you start to see that actually valuations are in line, because the PE valuations aren't out of whack if you're really seeing the revenue that they're bringing, and more broadly, we see productivity broaden out?
Yeah, I think it's very interesting, because actually when you looked at the last earnings season, when you got to the end of it and you looked at forward earnings, NVIDIA was trading with a lower forward PE ratio than Walmart was. And so part of that is the movement of those earnings. We need to get, for all of us, I can't wait till we get into the December report season. Sooner or later, we will have some sort of a handoff from all the focus and concentration around just those 7 or 10 or 15 names. And we do need to see more broadening in the markets, because there's been a lot of interesting stuff going on in a lot of other sectors as well, or some that are second and third iteration of related to technology, and some that are totally unrelated, but are benefiting or will benefit from increased use of robotics and technology, and down the road when we have a breakthrough in quantum.